Actis is one of the world's largest emerging market private equity firms after being spun out from the CDC, the United Kingdom's development arm, in 2004. And in 2011, Actis was voted the Latin American and African Private Equity Firm of the Year and continues to invest heavily on the continent. David Cook, one of the firm's directors, joins us to tell us what deals the firm has been involved in of late. Before we get there, a little more colour from Warren at the Wall.
That's right, Bronwyn. We just wanted to colour this a little bit more from a global perspective on the private equity industry, because Actis is a very well-known and large emerging markets private equity firm. And this is just a view of the Pan-African commitments, the portion of money going to the private or through the private equity industry. Just at the moment in 2011, you can see undrawn commitments in Pan-African amounted to about 17 billion. Undrawn in South Africa, which is money that they've got but they haven't put to use, about 17.1, and then you can see that they've invested quite a large portion of the total, which is 81 billion rand. If we move to the next slide, it just gives you a feel for the extent or the sort of degree that private equity firms are involved in the economies of countries sort of across the world. You can see in 2011, which is the grey bar here, very high percentage in Israel, very big, quite big in the States, almost 1%. And then you can see as we go along here, South Africa at 0.17% of GDP. And then some of our peers in the emerging markets, Russia, Sub-Saharan Africa and Brazil, you can see that still quite a small amount of the total GDP being generated is from private equity investments. And then just the last graph I wanted to show, which was unrealized investments. Again, just goes back to the performance of some of the funds. Obviously, a key feature of private equity investing is that there's no market to determine the valuation, so you need to have the firm use certain operating standards to generate the valuations. And it's been a little bit of a tough time. We can just see here, this is the latest valuation versus the initial cost or initial investment, and it's lower than the initial cost. So perhaps David can give us a bit of insight into what's going on in some of the underlying investments Actis have on the continent and perhaps in the emerging markets they operate in.
Well, that's an appropriate place to start. What's happening with some of the underlying investments and perhaps focusing on the hotspots right now?
Sure. Well, I think in an African context, the change in attitude from the international investment community towards Africa is just staggering. When we spun out of CDC in 2004, as you referred to in the opening, Africa was sort of a really novel conversation in our international fundraising conversations. How that has changed today. The investors are now sometimes slightly more wary of other parts of the world and really are coming in force at Africa.
I want to just give you some anecdotal evidence there. Having just come back from Davos, Switzerland, the World Economic Forum, we had a de-risking Africa debate in the official WEF agenda. There was no standing room in that forum, and everyone was talking about Africa and the opportunities, and President Jonathan from Nigeria, President Zuma were treated as heroes, interviews across the board. So there's definitely a tangible excitement about Africa.
There really is.
David, I just wanted to come in here and ask you, I mean, one of the key things I think we've learnt about Actis and the way you guys operate is just how active a private equity firm is in the management and obviously the running of the company. But I think just for the benefit of our audience, you've got a network, I think, of operators almost across the world in emerging markets. Just tell us how you start putting together the intellectual capital at a company that you acquire and what you hope to do by injecting your own people into some of these businesses.
Well, I think the starting point is the sort of lens that we look at new opportunities through, and that will be from both a local on-the-ground view as well as a global sector lens. So we focus on specific sectors where we like to believe we understand relatively well. We surround ourselves within those sectors with ex-chief executives and the like who have travelled the journey in those sectors. When we look at new opportunities.
I can't let you carry on talking about sectors. You've got to tell me which sectors are we talking about in terms of your focal area.
The sectors that Actis focuses on are driven by an underpin across the emerging markets. Two key themes. The first is the more obvious one of the rising consumer, and the second is the underpin of the growing infrastructure development and demand for infrastructure across our markets. If you then sort of unpick that a bit, we then focus on 4 dedicated sectors within that: financial services, consumer, industrials and healthcare as well. So those are the key areas of focus. It's not to say those are the only pockets of opportunity, but it's where we have decided to focus our time and effort on.
Just in terms of going back to that, the way you operate and try and align the right people into the businesses, can you give us an example of deals that you've done recently where you've sourced people through your network and put them into the business and put the business to work?
Look, all of our investments we approach with both the investment professionals whose day job it is to go and find those new opportunities and actually undertake the investment, the transaction itself. But we also marry that with what we call a value creation team. So this is the team that you refer to that has often consists of individuals who are ex-chief executives, come out of industry and can help us and particularly help the management teams we sit alongside drive through the value creation plan. And that can take various different forms according to whatever that particular company needs. But specific examples, we own a business called Vlisco, Western Central Africa fashion fabrics business. We brought onto the board of that the former chief exec and chairman of Hermès, the French fashion brand. And he has really provided a lot of input in terms of what it takes to take for a business like Vlisco into a global context in the fashion industry, as but one example of that.
Just in terms of the types of transactions you do, in a country like America where you have such a large public market, a lot of private equity firms evolved to take those companies private. And I think KKR was probably one of the most well-known deals there. But in terms of the African continent, it's a little bit different to the types of transactions you're getting involved with.
It is.
What are the types of companies that you're seeing that are able to be acquired or to be invested in by a private equity firm on the continent at the moment?
Well, Africa, like the rest of our markets, the Actis markets across the emerging markets are often, the corporate space is often dominated by family-controlled firms. So family succession is a huge theme for the deals that Actis invests in. So that there is a real difference between taking an established listed business off the stock market and your KKR reference compared to traveling that journey with a family in terms of what they go through. And it often amazes me how similar the issues are that a family, whether they are running a family-owned business in Sao Paulo or Lagos, face. They're identical issues in a different cultural context. So Actis has the scars on its back from traveling the journey with those kind of families. But largely, the investments that Actis is doing in the emerging markets are growth investments. They may be fairly large investments, but unlike some of our colleagues in the US or Europe, there will be a lot more financial engineering as the basis for their investment thesis compared to the underpin of growth. That's what we're investing in.
We had Stephen Lopesher from Investec Asset Management on the show the other day, and again their focus is very much Africa, and a big proportion of that is into the unlisted space. And the question I asked him is how you find the crown jewels in each of these territories when you're dealing with so little information flow. Yeah. We've all traveled Africa, and it's tough out there. So what is it that you're doing on the ground to unlock that value?
I mean, I think the starting point again is teams on the ground. Without that, I think it'd be very tough. So, colleagues.
JVs, are you talking about joint ventures with nationals?
Our teams.
Your teams.
So our teams in Lagos, Nairobi, Cairo, Johannesburg, and across Africa, being able to unpick some of the less obvious facets of a business that you will only know if you live and work in these regions. That's the sort of starting block, and then it can be tough. Data analysis is often very thin. I come back to the Vlisco example. Before investing in that business, typically a US counterpart would look at market stats of market shares, and it's non-existent in terms of an informal traded market. So what we did there is we went across with the help of a consulting firm and did 2,500 customer interviews right across Western Central Africa, and then start to piece together the thesis of why we think this is a great business or not to invest in. But it's challenging.
It's not as glamorous being a deal maker in private equity as it's made out to be. I guess you've got to really roll up the sleeves and get to work.
Yeah, absolutely.
One of the questions I wanted to ask you, with your thesis that you invest in growth companies and growth sectors, why would these family businesses want to sell? And the second part of that question is, when you introduce an institutional investor like yourselves, how do you make the transition from a family-run business to a company or corporate structure with corporate governance standards.
You can just think about those structures in terms of bank accounts. Family businesses are notoriously bad at having one bank account, personal and business.
Yeah, and typically, sweeping generalization, but great at sales, highly entrepreneurial, super energetic, but the businesses struggle to keep pace in the finance function, in HR and organizational structure and the like. But the short answer is, clearly not all families do want to partner or give up the crown jewels. So it can take quite a long time in engaging with a family who are at this decision point. And often that decision point is driven by a succession issue, where perhaps the next generation aren't as interested in running the business. And the existing family members realize that the next 10, 15 years of this journey is going to be very different to the journey they've just traveled. So they look to someone like us to help them start to professionalize the management team, introduce new talent. And often that's a stage process. We invested in a personal care business called Paris in India. We started on a minority position in that business. We worked with the then chief executive, the main individual within the family, for 2 years. And then together with him went out to the market and found a professional CEO, if you will, and other management team to come in for the next 3 to 4 years of that business, putting in the right systems, putting in place environment, social and governance
You're creating an asset of value, that proverbial, there's something tangible that you can sell at the end of the day.
Precisely that. And often then the multinational community will then recognize that that's a business which they can feel comfortable investing in, as opposed to the more informal family business that we started out with.
We're going to have to take this conversation further at another time. I think so, definitely, especially on the family business front. Dave, thanks so much for your time. David Cook, Director at Actis.